Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, May 15th, 2009. Well, we're seeing a little bit of selling on Wall Street. It's very, very muted at this point. We had a little bit of an update earlier. It has reversed, and you can see that by looking at the spiders, the SPY chart on your screen right now. Again, we were higher. You can see initially we opened flat on the day. We kind of initially went higher, then sold off a little bit. You had these little bit of tails, and oftentimes when you see these tails, it's the market trying to break down. And when that fails, you'll have a reflex bounce up, and that's exactly what happened today. So I want you to just be alerted to that you can see when you have a one tail, the market traded down as low as here, then closed up here. Then again here, closed up higher, again for the third time, and it closed back above this key support line. Notice this pink support line connects with the low here, and the low here, and the low here. So you have a pivot point on that chart right around the 89.35, 89.30 level on the spiders. And once that got pierced and never closed below, the market started to reflex bounce to the opposite side, kind of like a rubber band. You keep stretching a rubber band, pulling it, it snaps back to the opposite way and goes even higher. So you can see that beautifully here as the market rallied all the way up. You had a key trend line right here in blue. You can see we pierced it yesterday and pulled back, but if I go and scan and show you where that came from, you'll understand. The high from 2 days ago there, right there, and then the low down here, the pivot low down here. So if you take that exact high, that's exactly what the market ran into on the upside today with that blue line. In addition, this pink line stretching down I drew in. Why? Because it's a key trend line, and I'll show you where I get it from. It's connected to the high on the 12th, and it actually starts going all the way to the closing high right here on the 8th last Friday. That's a week ago Friday. So if you take that line, take it from that point, and stretch it to the high on the 12th, as so, and just continue that line down, you will see it come into play right here. That's exactly where the market went into. Remember, when you have a trend line that crosses another trend line or a moving average, and the price of a stock or an ETF or the market goes into that, that's going to be heavy, heavy resistance. And interestingly enough, the market reversed on a dime here and just started to collapse. You had a 1, 2, 3 red candles, a pause, then a 1, 2, 3, 4 candles before kind of trading sideways, breaking down to support. Now it's bouncing currently off support. Now, many of you may say, well, why did it break down so much there? What's going on? Was there news? Was there something else? Believe it or not, folks, it comes down simply to this, the dollar. All right? And I'm going to show you the dollar chart, guys, and you're going to be blown away. And this is something I've concentrated to the premium subscribers of the Research Center for over now 3 weeks. I've had them following the dollar tick for tick, and the markets do the exact opposite. Why? Well, I'm going to show you right now. First of all, take the UUP. This is the dollar index that we follow, and I want you to look at it. So initially on the dollar index, we were opened right up here. All right, this is where we opened right in this area. And initially over the first hour of the trading day, the dollar sold off, actually hitting a low right here at the 10:30 to 10:40 time frame, right in here. All right, so notice the dollar opens here and slides down to a low down here. Now what happens after that? Let's go check it with the market. So while the dollar was selling off, the market actually rallied up. All right, and this is perfect, guys. Really look at that push as the UUP, and again, I'm going to show you that, as the UUP really collapses over these two candles and makes a low down here, the market is rallying up strong right into resistance. Then what happens at that point with the dollar? Let's switch back to the UUP, which is our dollar index we follow. At that point, the dollar starts to rip higher like this, and now it's trading kind of on the sideways motion. What's the market done since really 10:30, 10:45? Let's go back to the spiders, and the market has fallen dramatically as the dollar ripped higher and now trading sideways. So it's very much tied. The markets right now are so tied to the dollar. Every move in the dollar is getting the opposite move in the markets, and you can see that every day on the charts. Follow the UUP for that, or the dollar index, whatever you prefer, or you have access to. But again, you can see the dollar was rallying starting right here at 10:30, 10:40, right there, and the market collapses as the dollar rips higher. So that's exactly what's going on here, folks. That's why you've seen a turn down in the markets. The markets continue to trade very light volume today. We had a decent amount of volume early on because of options expiration, but most things really quiet down by late morning, early afternoon. You'll have a little bit of bump in volume probably into the 3 to 4 p.m. time frame as people kind of solidify their positions going into the weekend. But in any case, right now the Dow trading down about 38 points on the day, while the NASDAQ is trading basically flat to down a point. I mean, the NASDAQ is really just flat to down a point here. The technology stocks are very strong. Apple Computer having a good day, up 77 cents. Even Google having a good day here. Google up about $4 and $4.50, and Amazon just down 75 cents. Research in Motion up $1.64. RIMM. You can see having a nice day. Believe it or not, this is a little bit of a bearish pattern on the Research in Motion chart, so be aware of that, all right? Off of a nice drop here, you have an in spirit of or bearish flag pattern developing here with resistance. If it recaptures this 20 moving average, then that negates it, okay? And I want to make that clear. Technicals, these technical trendline analysis, price pattern and time, it has checks and balances, which is the beauty of it, because, you know, if you were to take a short position for here, for instance, and it were to roll down, that's great. If it doesn't do it, if it gets right above this 20, then it negates the play, and that's fine. So you really have a good checks and balances situation here with a very small amount of loss, and you can apply this to the daily charts, the weekly charts, the monthly charts, the 60-minute charts, anything you want, and that's the beauty of it. So I happen to just take a look at this pattern, and it is actually a little bit of a bearish pattern developing here on Research in Motion. Now going back to the spiders, folks, the levels continue to be key. Notice the level we hit on the downside, a little bit of support right down here. Why? Because if you go back and you take the closing lows of all these candles, not the tails, the closing lows, you're going to tell that you're going to come into support right there. If you break that, your last support bastion, if you will, or Bastille, if you will, the lower portion will be the top bottoms of that tail right around that 88.50 level. So both of those levels will be support. You can see so far today, going back to present time, the first one was hit, and we got a bounce off of it. Now what you want to see is, did we come back down and test that lower one? If you break that, then we'll go to the 60-minute and talk a little bit about your next levels. On the upside, you have a little resistance. You can see the market hit it right here, pulled back, and is now testing it right up here again before this little bit of a pullback. And that level will be your resistance in the early afternoon session here as well, right around $88.90 to $89 on the spiders. If you get through that 20 moving average, right now sitting at $89.20 or so, that will adjust though throughout the day. Pink trend line will be at about $89.30. Then you have resistance at the 50 moving average, $89.45, $89.50, and then ultimately this trend line will be a big one, this pink one, stretching light pink all the way down here, which currently sits at $89.65, but will adjust down every candle as it continues to slide lower. So those are your key levels that you're watching on an intraday basis, folks. Okay, let's go to the 60-minute quickly and discuss some key levels that you're going to be watching. All right, now number one, I can see already that you had the pullback, then a bearish flag pattern. Now you're coming down to retest. This is going to be your main level to watch, really. Really, your lows of yesterday will be your keys there, right around that 88.50 on your 60-minute. You can see we almost touched it already today, and now we're getting that bounce off of it. On the upside, really the highs from yesterday will be in play right up here, anywhere between 88.75 and 89.75 and $90 on the spiders if we get a big bounce. The high of the day today on the spiders was $90 to the penny, so you have that high in there as well. Kind of retested that area. Again, you can see those are your two levels on your 60-minute. If you break this, your ultimate support will be right here at 88, 87.90 to 88 on the spiders. And why? Because you have a gap fill right in there to watch very closely. After that, you could actually look for a little bit of support coming down right here, which again mirrors the low pivot right here before that bounce on that green candle and the 200 moving average on your 60-minute chart. So these are all big levels to watch. On the upside, obviously, this trend line right here, your 50 moving average, will be a pretty big one as well to watch at around 90.50, 90.60 as it continues to trend lower. Right now, again, the Dow is lower by about 40 points as this market continues to trade. Just go back to the intraday chart right now, and you can see, again, you're now trading kind of in a sideways action here, but below, above support right here at 88.50, 88.60, and below resistance right here at around 88.90 to 89 on your spiders. Again, if you break, you can see your levels. These levels are great. Just remember, volume should get lighter and lighter into the afternoon session until about 3 o'clock. You'll have a little bit of an uptick, but overall today expected to be a little lighter. We've only done 1.35 million contracts on the futures. That is very light volume for 1:30 p.m. Eastern Time approximately, give or take a couple minutes here. All right, again, technology really leading things. In my book, it's the strongest sector. NASDAQ is only down 2 points, while the Dow is lower. Oil really had a big reversal today. I'll touch on that quickly into the end of this video. Look at this. You gapped low on oil, made a big move up to gap fill. We called this out in the chat room and on the free blog for this level, and look at the rollover it's had since then. That was the greatest shorting opportunity of the day on oil today. Major, remember, 200 moving average and 20 coming together, plus gap fill. That's major resistance. Look at the dump it's taken. Come join the Research Center, folks. It's amazing. Come join the webinar, the chat room, you name it. Check us out at inthemoneystocks.com. Take care.